This week on Wealth Track, an exclusive sit-down with Artisan International Fund's Mark Yockey. Where in the world is this great investor finding sustainable growth at reasonable prices? His answers are next on Consuelo Mack Wealth Track.
Funding provided by Clearbridge Investments, a Legg Mason company; Thornburg Investment Management, active management, flexible perspective; Koo and Patricia Ewan through the Ewan Foundation, committed to bridging cultural differences; and the Fairholme Foundation.
Hello and welcome to this edition of Wealth Track. I'm Consuelo Mack. With episodic exceptions, the U.S. has been the place to invest since the global financial crisis. Now, there have been occasional bouts of outperformance by European and emerging markets, by some specific geographical locales and individual countries, but overall, the U.S. market's trajectory has been higher, the U.S. economy stronger, and the dollar dominant. The past year is a case in point. No matter where you looked around the world, currencies weakened against the dollar, from the Japanese yen and the Swiss franc, to the Indian rupee and the South Korean won, to the British pound and the euro, to the Chilean peso and the Brazilian real. It has been a challenging time for global investors, especially those running international funds. This week's guest is up to the challenge and has been investing overseas for 3 decades. He is Mark Yockey, founding partner of Artisan Partners Global Equity Team, where he oversees $24.4 billion in assets. He is longtime portfolio manager of the flagship Artisan International Fund, which he launched in 1995, and for which Yockey was named Morningstar's International Stock Fund Manager of the Year in 1998 and finalist in 2012. Artisan International, which is a bronze medalist analyst rating from Morningstar, recently reopened to new investors, having been closed for several years. Now, Yockey and his team also oversee the newer Artisan Global Equity Fund, which he launched in 2010 to include U.S. investments. Global Equity has also earned a bronze medalist rating. Although the two funds have many overlapping holdings and have both beaten their respective benchmarks, the ability to invest in the U.S. has made a big difference in performance. Artisan Global Equity's 5-year annualized returns of nearly 8% dwarf Artisan International's 5-year 2.5% returns. I asked Yockey if he expects the American market's performance advantage to continue.
Consuelo, I think it will. The U.S. is good at some industries that the rest of the world is not very good at, and some of these industries we dominate. Some of these industries that I'm thinking about are things like technology, big chunks of technology we dominate. You think about Amazon or Google or Facebook. Much of the software space is dominated by American companies, and these companies simply don't exist outside the United States, with maybe a few exceptions. And then you think about biotechnology, that's largely driven by the United States, and most innovations in healthcare, certainly not all, but many innovations in healthcare are driven by what's going on in the United States. So I think, as long as these growth industries of the future are dominated by what's going on in the United States, you're going to have opportunities to invest in things here that you don't have in other parts of the world.
And how long do you think the dominance will continue? Because I'm thinking, there are all these statistics about the number of new patents, for instance, that are being issued globally, and the Chinese are absolutely dominating, new patents, new ideas, new technologies. Do you see any immediate threat to our technological dominance, for instance, or our dominance in drug creation, or?
No, I don't.
You don't?
I think it's going to be a long time before the Chinese catch up in these new industries. They're 2 to 3 generations behind in chip production, for example. They're totally dependent, many of their companies, on NVIDIA's chip. Mm-hmm. And in the biotechnology area, they're just beginning to do research in many areas of biotechnology. Mm-hmm. So I think it's going to, in 20, 25 years from now, it may be a different story, but as long as people continue to innovate in this country and innovation is rewarded. If you're an entrepreneur in the United States, you can benefit a lot from the from your innovations. And
Right.
in many other countries, and possibly China, not always, but sometimes, you don't always enjoy the benefits of those innovations.
And gee, that makes a difference.
It does.
Does it?
It does.
Do you think that growth is going to continue to outperform value?
I do. I do. I think a lot of value stocks are value traps. Because it's a digital economy today. There are businesses that added a lot of value in the past are being disintermediated. And I'm not talking about taxis and Uber. I'm talking
Right.
about, software companies replacing other companies that provided the same service, and now you can buy it through software at a quarter of the price. A lot of, industrial companies are being disintermediated by other companies. And so, we'd like to find companies. One of our sort of pillars of our investment style is to find areas where there's not a lot of competition.
Right.
Because if we can find areas where there's not a lot of competition, you typically have more pricing flexibility, and you'd like to have the ability to raise prices. And that's why these data providers, companies like that, are so valuable, because they can raise prices because they're little monopolies.
So if I look at the global equity fund versus the international fund, for instance, what kinds of companies have made the biggest difference for the global equity fund that you couldn't invest in the international fund?
So the software area has been the biggest difference in a couple of companies in the healthcare sector.
Yep.
Things
wanna name
like,
some names?
So in the tool sector, we like the companies that make the tools that allow medical research to be done. Companies like Danaher, companies like PerkinElmer, companies like Bio-Rad. These industries are dominated by U.S. companies.
FANGs, for instance?
The FANGs. Now, what we've done is...
what have you done with the FANGs?
Well, we put a couple of the FANGs in the international fund.
Right.
And you might say, well, they're not exactly international. But in our view, they are unique companies that operate globally. So a very small part of the international fund is invested in U.S. companies.
Right.
And
I think it's 14% or something international.
These are mainly FANGs.
Right. Now, at Artisan, you describe the kind of companies you buy basically as having sustainable growth at reasonable prices. So what does sustainable growth mean? What are you looking for?
So, Consuelo, that means we're looking for companies that are not going to be around for a year or 2 years or 3 years. They're going to be around for 20 years. Companies that continue to innovate, companies that continue to grow. Nestle, we've owned for over 15 years. It's been a wonderful stock. It's more than tripled. It may have quadrupled. And you think that's a big, dumb, boring food company, but
Right.
actually it's terribly innovative. They have great products. They're respected around the world. They're a great beneficiary of globalization and the rest of the world incomes growing so that you can afford to buy some of Nestle's products. And they've constantly rotated out of these old businesses like fish sticks. If you remember fish sticks, I haven't had one for a
Yes,
while.
vaguely.
But I
Right.
used to have a lot of them. And now, people don't eat so many fish sticks. And now they're in things like coffee, where you make the really high quality coffee at home. And, they just bought out Starbucks coffee on the shelf business. So they're moving from low value added products into high value added products. And the beneficiary of that has been the shareholder, of which we're one of the biggest. And as the U.S. has certain companies that you can't find outside the United States,
Right.
Internationally there's some really unique companies too that we've been able to invest in over the last 15 years that have really helped the international fund, perform at different times extremely well.
Right.
And Nestle is one of those.
What are some of the other, international companies, internationally based, that you own in the international fund that you think are going to have the same kind of, performance, sustainability, and innovation that we're talking about in Nestle?
So there's our largest holding is a company called Linde.
Linde, right.
And it's a merger of a U.S. company that used to be called Praxair and a German company called Linde. And they put them together, and the authorities have made each company sell off some of their assets. But what's happened is they've been able to keep their best assets. And so you've taken two really good companies together and you've made an even better company now. And so fundamentally the industry is wonderful. And secondly, the management is outstanding, and it's highly cash generative, and it's highly stable. And if we ever do have a slowdown in the global economy, Linde is going to outperform everybody. It always has in every recession over the last 20 years.
And Linde is the top holding in both of your portfolios, both
Yes.
right,
Yes.
the global and
Yes.
the international,
Yes.
right? And Linde is in industrial gases, is that right? And
It's something that,
so, what is it that is so great about it?
well, you use industrial gases for everything.
Yeah.
Nobody realizes it, but you use it for everything. So industrial gases are used at hospitals, oxygen.
Mm-hmm.
They're used to get oil out of the ground. When the oil wells start to run down, you pump in industrial gas to get the oil
Oh, all
and gas
right.
out of the ground. They're used to, industrial gas is used to freeze frozen peas, if you have any frozen peas in the refrigerator for a cold, stormy night.
So it's one of those, right, components or whatever that's used in just about everything, that none of us had a clue.
And it's the best
Right.
business in the world.
Right.
All right, one of the best businesses in the world.
All right. What's another best business in the world that you might have in international and in global equity as well?
Well, so there's these other group of stocks that we like a lot, and they're the exchanges. And our second biggest holding is Deutsche Börse. It's the German stock market, but that's not why you own it. You own it for the derivatives exchanges that they have. And the regulators 10 years ago said, after Lehman and all the problems of that
Right.
bankruptcy, that you had to trade products on exchange. And so all of the holders of the exchanges around the world have been beneficiaries of that because a lot of trading was done over the counter. It's all moved down to exchange, and if you own one of these exchanges, you've done extremely well. And then derivatives trading grows every year. And these guys get a little slice every time there's a trade. And they also own the repository for all the stocks and bonds in Europe. They have $13 trillion in Clearstream, and they get paid a little bit to hold those assets, and that's worth $300 or $400 million a year. They're going to make acquisitions. It's doubled since we bought it, and we think it's probably going to double again. We own the London Stock Exchange as well. That's been a great stock for us, and Deutsche Börse has been a great stock. We own ICE in the global portfolio, and we own the CME. So the exchanges are just fantastic.
One of the approaches that Artisan is known for is that you identify big themes that you want to participate in, and certainly the exchanges are part of your financial services theme. And what other kinds of financial service companies are you investing in?
We like the insurance brokers, and it sounds like a terribly boring industry, but actually as an investor, when you see something like this, it's actually pretty exciting. Because there's very little competition. It tends to be a rather small industry that, with a few number of providers and a large number of customers. So that means that you have not very much competition in some areas. And these companies are highly cash generative. They also have big consultancies. And if you think about all the new risks that are possible in the world today that we haven't thought about in the past, things like cyber risk and terrorist risk, pollution risk and climate risk.
So the insurance companies assess all of those risks, and that they have actually consultants that will advise companies
Yes.
as a side business.
Sure, because if you're a company,
Yeah.
how much climate exchange, how much climate insurance do you need to have?
Right.
Or how much terrorist risk insurance do you need to have? And so what they have is they have the data. And the companies, an individual company buying insurance doesn't have the data because he's not able to access every company in the world.
Right.
These companies that are in between can access all the data so they know what these risks are and how to price them. And it's a great business because you know what? The world, things happen.
Yeah.
And you need insurance.
How interesting, one would think. Again, the insurance industry is a growth industry. Some other things, demographics is another theme that you've identified. What part of demographics?
So mainly it's on the medical side. So things like Medtronic, and they're involved in diabetes care, and Western Europe and the United States and Japan are
Right.
rapidly aging societies. And we're going to use more healthcare as we get older. And companies like Medtronic, which is cheap as dirt, is going to be a big beneficiary of that.
So why is Medtronic cheap as dirt? What is the misperception in the market about it, do you think?
Well, they made an acquisition a few years ago, and we owned the company that they bought, so we benefited there. We
Right.
kept the stock, and they probably overpaid for our acquisition 5 years ago or so. And so they've been sort of digesting it, and it's taken them a little longer than possibly it should have. But now we think that they're through this, and they have a bunch of new products coming out. So there's wonderful advances coming in. It's some of these things are fantastic. For
Right.
diabetes care, you have continuous glucose monitoring, so you can get your insulin as you
Right.
need it, and it just improves the lives of people by a factor of 10.
So that's demographics. Technology, we talked a little bit about it. Which areas are you most excited about in technology?
So I'm going to sound very boring, but these FANGs, we're not so big about the A in FANG, but we're pretty big on the F and the N and the G.
All right. So you mean
Facebook,
I mean, it's good. So sometimes it's FAA. So sometimes it's Apple and Amazon.
we like Amazon a lot.
You do, but not Apple.
Not Apple so much. We think they've got issues longer term.
Okay.
It's been a wonderful company.
Right. So let me stop you there. So what is it that, so you don't own Apple?
Don't own Apple.
Right. And what's changed about Apple that makes you less enthusiastic about its growth prospects or business prospects?
Well, I think they're running up against the ceiling where they can keep raising prices. And,
Right.
And when you get up to $1,000 a phone, and people are going to slow down the replacement cycle of buying new phones, because everyone has a smartphone now in the world.
Right.
And so you have to. It's you and I. It's you and me buying a new phone. And if we say the new phone is pretty much the same as the old phone, why should we get a new phone? You know.
And so you see that playing out more and more in Apple's case.
So I would suspect it's going to slow down, but it throws off a ton of cash.
Right.
It's not very expensive, you know. So there's some reasons to think it isn't going to be a disaster, but it isn't something where we see a lot of growth there. We like Microsoft much better. We like
Because of cloud or cloud services?
because
or?
of cloud and because of the new management is really good, really strong. They're buying back stock. They're highly cash generative.
Amazon, you mentioned.
Amazon is the cloud business is fantastic.
Right.
The retail business barely breaks even, but that's only because they make money, but not very much. But
Because they keep investing in it, right?
they're investing massively building
Right.
out their own infrastructure, and when that reaches maturity, they're going to be highly cash generative.
Do you see any end in sight to Amazon?
Well, if you look at total retail sales, there's still a relatively small piece of retail sales.
Right. So there's lots of room to grow.
The thing that's impressive to me is that this Prime membership, I don't know
Yes.
if you're a Prime member, but
Yes.
I'm guessing you are, and I am. It's all the people that make money in the United States
Right.
and all over the world. So their customer base is a highly affluent customer base that they're going to continue to sell more products to.
Right.
And as long as the offer is a good offer and we get more than what we think we're paying for, then we're going to continue to use it. And that's a wonderful, it generates between 5 and 10 billion in cash, just the $100 a year they get from Prime membership.
Right. Netflix, do you own Netflix?
No, we missed it,
Okay. Oh, so you missed it.
sadly.
Right.
We don't talk
Too
about
late.
that one in the office.
Right. Alphabet, Google, clearly you own.
Google, we love Google.
And-
Same,
right.
same story.
All right, so those are, it's so interesting. Those are core holdings. A lot of people own them. They're a big component of the, of the market, U.S. market.
Yep.
But that's okay, as far as you're concerned.
Yep.
Yep. Infrastructure is another area that Artisan has identified as a theme. So some examples of that you think we should know about.
So we own this company called Vinci in France, and they own airports, and they own the second largest construction company in France, and it's highly profitable. And the contracting business is only 3 or 4 companies, major companies that do all the contracting, and they make very attractive margins. It's a very low capital commitment, so that they tend to be very high profitability. And they turn their assets, 4 or 5 times a year, so it tends to be highly cash generative. And we think that company is going to keep growing. So that's a great story, and it's cheap.
I meant to ask you under the technology theme about artificial intelligence. Is that an area that you're investing in, and if so, where?
Well, we're doing it through Google and through Facebook.
All right, which are spending a ton of money
A ton of
each
money.
on artificial
And
intelligence.
Microsoft too.
Right.
And I've met the heads of AI for Microsoft and for Facebook. The Facebook head of AI is a French guy. The French are really strong on mathematics and artificial intelligence in this whole area of research. But we think it's going to be a big area, but it's probably another area where the U.S. companies are going to dominate.
Wirecard is another company that you're invested in both portfolios. What's the story with Wirecard?
So Wirecard's a German payment processor, and the world is, there's a couple of big trends going on. One is e-commerce, so people want to buy things online, whether it be from Amazon or whether it be from wherever.
Right.
And the other thing is people are using cash less.
Yes.
People aren't writing checks, people are paying with their credit cards. And so there's companies that specialize in processing these payments. And these companies think about things like PayPal, think about companies like
I don't know, MasterCard.
MasterCard,
Visa.
think about Visa.
Yeah.
There's a bunch of these companies.
Right.
And other names that are sort of doing the plumbing, and Wirecard is sort of in the plumbing business
Oh, it is.
for internet e-commerce. And now what they're doing is they're calling it omnichannel, because if you're a retailer or you're selling something either to another business or to a consumer, you have customers that are going to transact online. Some are going to do it in the store. You want to have a payment processing system that will process payments no matter how the customer. If you just want the money, right? So
Right,
you
sure.
want to facilitate it. You want to make sure that the process is as smooth as possible to make sure that the customer completes the transaction. And Wirecard does that. They do it all over the world. We invested in it years ago when the stock was 5. It's now 140, and we think it's worth more than 200.
Wow.
It is a little bit volatile. It can go up
Yeah.
and down a little bit.
Right.
But the management is terrific, and we also in the global fund we also own PayPal. We also own this company called WEX, which is another great story. They do fuel cards. And they're,
Just solely fuel cards.
well, they do fuel cards, but the new business is B2B transactions, so business to business transactions. So right now, most small and medium-sized businesses write checks or have direct deposit from the bank. And what's going to happen is it's all going to be done with cards in the future. And it's probably a 20, 30, 40, 50 billion trillion
$20 business, yeah.
It's
WEX, W-E-X?
Yeah, and it's these companies are just fantastic.
If you had to pick one investment for a long-term diversified portfolio, what would it be?
I'm going to go back to WEX. I really like the story of WEX and the idea of payments between businesses and businesses being done on cards. And not very many people are doing it yet. And I wouldn't be surprised if in the next 4 or 5 years somebody buys this company. But I think the runway for companies in this business and the whole payment space is very attractive for the next 5 or 10 years.
So we will end it there, Mark Yockey. Thank you so much for joining us again on Wealth Track. We really appreciate it.
Thanks for having me.
At the close of every Wealth Track, we try to give you one suggestion to help you build and protect your wealth over the long term. This week's action point is make some investments outside of the country. Now, all investors tend to have a home country bias. It's where we live, it's what we know. The U.S. has been the place to invest for the last decade. Our home country preference helped us, but it's late in the economic and market cycle for us. It's early for some other countries, particularly in the emerging markets, where some countries are experiencing economic turnarounds and political reforms. Among Morningstar's favorite emerging markets funds are one from Mark Yockey's firm. Artisan Developing World Fund is rated 5-star and is a bronze medalist. The fund is run by an experienced emerging market manager, Lewis Kaufman, who launched it in 2015. It focuses on 40 to 50 high-quality companies, either based in the markets themselves, including frontier markets, or developed market companies with large exposure to emerging markets. An established emerging markets fund run by an experienced team always has a place in a diversified portfolio. Next week, we have an exclusive interview with five-star fund manager David Giroux. If you thought the stock market was risky before, wait until you hear his analysis. In this week's extra feature on our website, history buff Mark Yockey shares one of his recent favorite reads. Please continue to share your thoughts when you reach out to us on Facebook and Twitter, and catch up with us anytime on our YouTube channel. On this Memorial Day weekend, join us in remembering those selfless Americans who gave their lives in active military duty to protect the freedoms we so often take for granted. Have a lovely weekend and make the week ahead a profitable and a productive one.
Funding provided by ClearBridge Investments, a Legg Mason company, Thornburg Investment Management, active management, flexible perspective, Koo and Patricia Ewan through the Ewan Foundation, committed to bridging cultural differences, and the Fairholme Foundation.